Good morning. Welcome to Morning Call. Budget's done and dusted. Budget week is also done, and now it's over to global markets. This morning, global cues are not great. While US closed in the green, Asian markets are not looking good, and a lot has happened over the weekend to make global markets nervous. The debt sequester, we did not make much headway with that, and a lot of spending cuts are coming in the US. Let's see how Europe and the US open up today. But for this morning, Asian market cues are not very supportive for our market opening. Mitali, hi, good morning.
Hi Udayan, good morning. Good to see you in Singapore, the country that was probably affected more by the budget than India was. But as you said, global markets don't look great, and you can feel that sheen of risk aversion this morning.
Yeah, for multiple counts, Mitali, because I think, many things have gone wrong over the weekend. First, of course, is the US, and the US market closed before the decision taken by Obama to impose those spending cuts of $85 billion over the next few months, and that will slow down the US. There are more spending cuts stacked up over the next few years, so the US is not in a great place, and the US futures and how Europe opens up this afternoon will be quite critical to watch. So we should not be lulled into complacency that the US market has shrugged off what has happened on Saturday. But also, in Europe, things are not looking great because of the new allegations surrounding Berlusconi in Italy, suggesting that he was part of a scam. I think has generally set back expectations of forming some kind of a coalition government. Italian markets reacted quite a bit on Friday, and I think you'll continue to see European markets remaining quite volatile and edgy. But the thing which is probably affecting the market the most in Asia this morning is what's happening in China, because over the last couple of days, first the Chinese property market curbs soured sentiment, and the more recent Chinese PMI data, which has been quite shocking actually, has soured mood about growth in the region. So it's a combination of the US, Europe and China which is leading to this poor sentiment that we're seeing across global markets. And this is important because the budget's out of the way, and we were discussing last week, Mitali, how once the budget's done and dusted, 48 hours after that, markets will go back to tracking global markets. In that, the factors that I just alluded to probably assume some importance, because they'll probably decide what March turns out like after what's been a very pedestrian February series for us.
And you can see it most apparently in the contraction in the commodity market as well, Udayan. But you're going to be speaking, and you have been speaking to a lot of institutional investors over there in Singapore. Generally, though, even domestically, market sentiment is quite sour. I mean, I don't know how many people expected to come out of the budget with the Nifty down 2.5% for the week.
Yeah, it's not been great. I mean, I will speak to a lot of people. I spend the morning with a very large FII who runs $5 billion in India. But when you have got that big a stake in India, you can generally tend to be bullish and look at the brighter aspects of investing in India. But, the way the market reacted to the clarifications which came in on the FII front or the DTA front made you feel that maybe things are not on the right track, because we just about made a little bit of headway. There was some marginal short covering. Also, it was disheartening that a lot of the shorts which have got piled up over the last few days leading up to the budget from the FIIs did not get covered up. So while we did get a little bit of money in the cash market, not a huge amount of money, the short covering on the Nifty futures is still not started, which tells you that people believe, or many of these global traders believe, that in the near term we may not have exhausted the downside for our market. So, I think the budget's history right now, it's come and gone. I doubt whether there's going to be any lingering impact. The sell-off has happened. After that, the mild stabilization has happened as well. And now we go back to tracking global markets and the general trend that we've had in place. I think the wind is not blowing in a great fashion for global markets as we enter March. Things could turn around, but for now I think it would be prudent to stay with a cautious view on the market till we rediscover some momentum on the way up, and that's not visible on the as we start this week at all.
All eyes will be on the index as well, Udayan, after the amount of damage the heavyweights saw last week.
And it did not look like we were doing major damage control on Friday despite clarifications. I heard a lot of people on Thursday suggesting that the sell-off was only on account of this DTAA problem. If that was the case, then the Nifty should have been up 100 points on Friday, but was up 20-odd points. I think right now the budget's out of the way. The market has fallen into some kind of a groove. Now, what that groove is difficult to determine, because on the way up, if there is a pullback, I think 5,800, 5,900, these kind of levels will become challenging to cross given the kind of damage that has happened of late. part of the short covering, stock-specific short covering happened on Friday. Is there more left in the system? There might well be. But to trigger that short covering off, you need a good global construct, and I'm not sure that we have that in place this morning. So it does not appear that the downtrend which started and got accelerated towards the end of last week is over, and 5700 ballpark is the floor that the Nifty is finding. So it's a trading call now whether the Nifty is headed towards 5600 or 5500, but I think it would not be surprising that if this downtrend carried us even lower over the course of the next few days. There could be pullbacks because every downtrend is punctuated by pullbacks, and we did not get a big one on Friday. For some reason, if global markets do strengthen, you will get that pullback to 5800 kind of levels perhaps. But I think the higher odds right now, the risk reward from a trading perspective, probably stacked against the market. It did not look like the downtrend has exhausted itself on the way up. In fact, if there is momentum, or you do spot momentum, it's probably on the way down rather than on the pullback.
There have been a slew of conference calls over the weekend post the finance minister's clarifications. You've been speaking with some investors as well. Did he do enough, or is it, as you indicated earlier, that the mood has turned sour and people really don't care that much about the clarification anymore?
No, I think it was digested. It's probably not such a big factor for the market, Mithali, this week. On the day of the budget, it created some confusion. I think the morning after the budget, people came around to believing that it will get sorted out. It was sorted out in the middle of the day, and even then the market did not make much headway. So I think the poison with regard to the DTA clarification is probably out of the system, but does that mean that the markets are on their way to somewhere special? I doubt that very much, because two things remain unresolved. One, before that, let me tell you that generally the perception on policy from India is not bad. The budget was a non-event, and therefore people did not like it too much, but we move on. Over the weekend, diesel prices, bulk diesel prices have gone up, petrol prices have gone up again. So generally people believe that fuel price hikes will continue to happen, and that puts policy in a goodish light for India, and a tailwind as it has been since the month of September. But that's not the problem. The problem is people are now fretting about this kind of growth numbers which are coming in on India, what ramifications it has on earnings, the cyclical stocks on which there was a lot of hope at the start of the year, and whether they will not perform in such a weak macro backdrop. All this compounded by the fact that global headwinds after a long time are beginning to mount from Europe, from the US, and from Asian shores, notably China. So I think all these are the most important things to focus on now, and that's probably robbing the market of energy. Flows have weakened, macro headwinds have started piling up here, and global macro has also started looking a little dodgy after a clean run for the last 5 or 6 months. So I think the market's problems are more to do with these factors rather than a DTA clarification which may have impacted the market for 48 hours.